Welcome, my dear students, in our lecture number 10 with the title International Stock Markets. Today, the first topic, background about international stocks markets. The stock or equity market, we can use the same words, stock or equity market. Is the financial market that receives the most attention among all financial markets. So, we can call that equity market or stock market is interesting or exciting market because at this point we can talk about fluctuations in the prices for any stock or equity which make ups and downs for investors or traders. In all cases, the stock or equity market part of the capital market for long-term debt instruments. So, when we talk about fluctuations, in this case, the price of any stock or equity may be increase or decrease due to more reasons, may be political, may be economic, and so on. Generally, stock prices significantly increased or decreased, ups and downs. Why equity market prices fluctuated? Can fluctuate because there are many factors influence on the price of stocks. Number one, maybe corporate or industry specific new rumors, maybe bad news about the corporate issuing the stock, maybe good news about the corporate issuing the stocks. So, in the first case, bad news, negative impact for the equity price, but the good news had positive impact on the equity price. Reason number two, general economic conditions. General economic conditions, we can talk about general case or general factors related to economic policies, maybe fiscal policies, maybe monetary policy, new actions, new laws from the government, which can make effect on the market price generally. So, for example, number three, economic policies adopted and decisions made by the government and central bank. Any economic policy affect in the equity market. For example, when we talk about the interest rate, there is inverse relationship between the market, stock market, and the level of interest rate. Any actions from the central bank to decrease the interest rate, this equal a good news for stock market in this country. Changes in the degree of political stability. Any political environment, the same, may be negative or positive impact for the stock or equity. Say, stability in political environment. This good news. Good news. Good news equal stability in the stock market. Maybe political instability. In this case, bad news for the stock market. The changes last factor changes in the laws and regulations related to the stock markets. Topic number two, issuance of international stocks. Issuance of international stocks. What about the reasons? In fact, some international corporation, some international corporations issue stocks outside their home country. And this is our topic. We talk about international stocks, we talk about foreign stocks. So, why corporate issue stocks outside their home country? Due to the following reasons. Number one, investor may expect positive economic conditions in a country and therefore invest in stocks of the corporation in that country. This topic we talk about relationship between the expand of investment. Any domestic or national corporate try to expand investment outside the country. So maybe in Egypt and another country like Saudi Arabia. In this case, when we compare between the conditions, maybe investors try to issue stocks or corporate issue stocks in the Egyptian market due to positive impact, or Egyptian corporates try to issue stocks in the Saudi Arabian market due to positive impact. Reason number two, investors may wish to purchase stocks denominated in currencies. Why? Because they expect to strengthen in the future because that would enhance the return of investment. ROI, return on investment. This reason number two, any investor try to increase the return of investment with the assumption that there is the same stock, there is the same risk in two markets, so we can select the optimal market due to the return of investment. Reason number three, some investors trade in international stocks as a method for diversity. In this case, we talk about portfolio diversion and due to the risk issues. So in general, three reasons to issue foreign stocks. Number one, we talk about expectation of positive economic conditions. Reason number two, we talk about expectation about strong currencies and enhance and increasing the return of investment. The last one for diversification, our portfolio at the corporate and risk. The next case study in our textbook, page 167, case study 4.1. In our textbook, talk about the Dow Chemical Company, abbreviation TDCC. Large US-based MNCs, multinational corporate, in the industry of chemicals, corporations, talk about TDC create business in Japan and create stocks or issue stocks in Japan denominated in Japanese yen. This is the case study for international stocks or equity. The first topic, when we talk about international corporations may issue stocks in foreign markets for various reasons, we presented like diversification and exchange the or increasing the return of investment or on investment, and so on. Yankee stock offerings. Yankee stock offerings. In this case, you remember the Yankee word when we describe the market in USA. The stock denominated in the currency of the country where it's placed. So, an international corporation's stock offering may be more easily traded when it issued in several markets. When we talk about the major foreign equities, for example, the stocks of some large USA corporations. USA corporations buying and sell various stock exchange around the world, which gives non-US. So, in this case, we talk about international corporations target the United States market or Yankee stock offering. International corporations target the Yankee stock offerings because the Yankee market high liquidity because we talk about many stockholders in USA. We talk about the purchaser or traders deal with the foreign stocks as an investment, and international corporations may be able to place and enter the stock offering in the USA. In case of USA, when we target at the corporation the Yankee market or Yankee stock offerings, we talk about diversifications for the shareholders and decrease the risk for stock price volatility in the stock price. Investment banks play major role in the US markets. So, when we talk about investment banks and other financial institutions in USA, we can talk about underwriters of the stock targeted for US market. This is due to the fees for underwriting may be 7% of the issued stock value. Okay, why we talk about the USA? The majority of recent stocks offering in USA by foreign issuers resulted from privatization process. The role of privatization in the or expanding the US or Yankee market. In general, when we talk about privatization, this is transfer the ownership in very simple words. Transfer the ownership from public to private, from public sector to private sector, maybe by use more models. One of them is issue the stocks or equities. So, the privatization process, especially in Latin America and Western Europe, corporations try to expand and target the US shareholder. Due to large size of some of these corporations, their national stock markets are not large enough. So, the first step, major or large corporation transferred from public sector to private sector. This is called privatization. Due to the small size of domestic market, the corporations target the US market. Target the US market to can satisfy the issuance of the equity or shares. International corporations that issue stocks in the USA have their shares listed in US stock exchange, and the same regulations, the same disclosures, the same any instructions from the US market applied for the corporations. Next point, globalization of stock markets. Generally, globalization, we talk about the world eliminate all barriers on traded goods, traded services, movement of people, and so on. What about the appearance of globalization? Globalization started with 1980 decade. 1980, this stock market become globalized. Why become globalized? Due to this decade from 1984, specifically in 1984, we talk about some changes in the world system. Mainly, we talk about the negotiation about free trade, which started from 1986 to 1993, which called Uruguay Round. Uruguay Round, this is the last round for or of GATT, General Agreement, Tariffs and Trade. Okay, so when we talk about the globalization, it removes the barriers for trade, for goods, for services, for investment, for people, and so on. In recent years, many corporations have obtained funds from foreign markets. So, major corporations and some countries the same target the foreign markets to satisfy their financial needs. So, in case of equities, we talk about corporations. Corporations, in this case, target the foreign market for financial needs. This strategy may represent an effort by a corporation to enhance its global image. Now we converted from or we transferred from national image for a corporate to global image about the corporate. Number two, approach much larger pool of investors so it can easily issue more shares of stocks. Globalization create facilities for any international corporation to issue shares or equities in the world. The same rule with the privatization plus globalization, critical factors or critical success factors for international equities. What about consolidation, mergers, and acquisitions? So, first, we want to mention the emerging stock markets. Emerging stock markets, abbreviation ESM, enable the foreign corporation to increase the large amounts of capital by issuing stocks. Some emerging stocks markets are relatively new and small. Examples for emerging stock markets, we talk about Malaysia, we talk about Brazil, we talk about Mexico, we talk about Egypt, we talk about Saudi Arabia, Emirates, major emerging markets. So maybe major or stock markets when we compare between the emerging markets and developed markets like USA. Developed markets like USA, very large, but emerging markets like Egypt and Malaysia and Brazil and Mexico, small in transactions for stocks. This make some stocks undervalued, which may attract foreign investors to those markets. However, stock markets in some developing countries are still subject to certain limitations. Maybe major of emerging stock markets suffering from barriers, suffering from limitation related to level or range for fluctuations, instructions, some laws for investments, especially for foreigner investment. So, the first factor related to globalization of stock markets, consolidation and the merger and acquisition, M&A abbreviation. So in our textbook in page 171, we talk about some examples, maybe during 2000 and 2002, year 2000 and 2002, some merger for Paris, Amsterdam, Brussels, and Lisbon stock markets. Another big exchange of the OMX Nordic Exchange, and the same for some Eastern Europe in April 2007, first transatlantic stock exchange merger, the same. So many examples. We can call the last one in the year 2014, ICE Intercontinental Exchange extended business to East Asia, but acquisition the Singapore Mercantile the exchange. So you can uh, you can present one example for consolidation or merger and acquisition. Exchange statistics in the 2019, in the year 2019, about international stock markets. Number one, market capitalization in the year 2019 equal 89.3 trillions of US dollars. Market capitalization equal 89.3 trillion of US dollars. Number two, value of share trading about 7 trillion of US dollar. Listed companies around the world equal 53,827. 53,827. Number of traders about 2 billion. 2 billion of traders can access to international or stocks markets around the world. The next point, what about trading in international stock markets? The first terminology, FPI. FPI abbreviation for foreign portfolio investment. Foreign portfolio investment. The foreign stock is a stock issued by the foreign corporation. So, the issuer of the foreign stock is a corporation based in a country other than the home country. So, this is a type of foreign portfolio investment. What about the international stock markets issuance or methods to buy or purchase foreign stocks? What about the methods to purchase or to buy the foreign stocks? The first method, direct purchase. Direct purchase of foreign stocks. In this case, international investors can invest in stocks of foreign corporates or companies that are listed in these foreign stocks exchange, which call direct purchase. So you can check about access with the internet for the exchange stocks in USA, in any country. So check about the listed corporates and choose the direct purchase. In this case, stock prices are quoted and paid in foreign currencies. For example, in the national currencies of those foreign exchange, and this is subject international investors to exchange rate risk. In this case, when we talk about international purchasing for stocks, this is the forex. The forex problem may be appeared in this case because we talk about two currencies. Practically, there are two ways for investors to purchase foreign stocks directly. We still, in this point, direct purchase. The first, open an international account with a broker in the home country. So, talk about international account with the any broker in your country. Say I am Egyptian and I want to purchase foreign stock in USA. I can search about a broker in my country in Egypt to help me to can open an account for direct purchase. So the second method, open an account with local broker in the target country. This point or this method, I will purchase directly, but with a broker not in Egypt, but broker in USA. This is my target market. And examples for uh, brokers like Boom's trading platform in Hong Kong. This is a broker that offers service for foreign investors. This is the first method for the trading in international stock markets. The second method, international depository receipts or abbreviation IDR. International depository receipts. It is a general term given to any financial instrument issued by a bank to represent a foreign company's publicly traded stocks. For example, an IDR traded in Germany will represent the stock of non-German companies. Stock of non-German companies. IDR traded in Egypt will represent stocks of non-Egyptian corporates. So, IDR trade on local stock exchange. They represent the stock of a corporate or company based outside of the home country. The most common example of IDR is that the American Depositary Receipts or ADR. ADR abbreviation for American Depository Receipts, which are certificates issued by US banks representing shares of non-US stock held by the bank. For example, US bank purchase the shares of foreign stocks and holds them. The bank then issue receipts called ADR. So the shares which the bank holds may be the backed or collateral for the ADR against these shares. ADR are traded in the US stock market, usually in NASDAQ, in the index NASDAQ. Many non-US corporates establish ADRs in order to increase funds and develop the name recognitions in the USA. What about another example? We talk about Chinese depository receipts, CDRS, when we talk about the depository receipts in China. In fact, 57% of the US institutional investors own ADRS, own American Depository Receipts. 57% of US institutional investors. So, we have three levels for ADR. Level 1, ADR cannot be used to raise capital and only for traded over the counter OTC. Level 2 and 3, ADR are listed on established stock exchange, but only level 3 ADR can be used to raise capital. So we talk about three levels of American depository receipts. Our problem number 16 in page 176. Now we want to make pricing for ADR. So in our problem, share of ADR, French firm, the one share of this firm stock that traded in French stock exchange. The share price equal 40 euros. When the French market closed, the US stock market opened with the euro equal 1.08 dollars. 1 euro equal 1.08 dollars. Now, if you want to calculate the ADR price equal the price 40 multiply the exchange or forex rate, so the pricing equal 43.2 US dollar. The next, our case study for 2 in page 176, we talk about Volvo ADR. Volvo ADR we can call Volvi. Volvi refers to Volvo ADR. Volvo is a Swedish car maker, talk about producer of commercial transport. Volvo trades in the US on the Nasdaq under ticker. When we talk about ticker, we talk about Volvi. Volvi, this is a ticker or the abbreviation. Depository institution, JP Morgan, ADR Group, and some institutions. Sure Volvo also trades on a Stockholm Stock Exchange under the ticker VolVB. So, in this case, Volvo, a Swedish corporation, issue ADR in the US market, and the same can issue depository certificates in the Swedish or Sweden country. Global, the same. We're still in how the international stock traded. The number 3, we talk about global depository receipts, GDR. GDR is the same or very similar to IDR, International Depository Receipts. The only difference between GDR or Global Depository Receipts and the IDR, International Depository Receipts, that is, GDR traded in multiple foreign countries, not just one like IDR. The same in all cases, but Global Depository Receipts traded in many markets, not only one market. What about international mutual funds? International mutual funds, purchasing shares of international mutual funds, and another way to invest in the foreign stocks. International mutual funds are portfolios of international stocks created and managed by various financial intermediaries acting globally. By investing in international mutual funds, investors can make diversity across the international stocks. So, international mutual fund managed by professional team and make diversification for investment in stocks and bonds to can satisfy majority for preferences. International exchange traded funds, abbreviation ETFs, are passive funds that track a specific index. International exchange traded funds represent international stock indexes that they have become popular in the last few years. Investors can invest in a specific index representing a foreign country's stock market. Yes, we can talk about in case of Egypt, EGX 30, EGX 100. So maybe we talk about trade in this index for international stock markets. And now we will complete our lecture time in discussion and simple questions in Google Classroom. And in the next lecture, we will present and explain very important topics related to the research in our course. See you and goodbye, my dear students.